Very respected speakers of this evening, CA Ramesh sir and CA Sundarajan sir, moderator of this session, CA Subhashini Ganapathy, senior members, friends, a very good evening to all of you. Friends, I am very happy to join once again with you all for the second day of this bank audit help desk program. Of course, this is one of the dream program with relating to bank audit. I'm happy to share that still we are getting a good number of questions, which means members really using our SIRC initiative, and I am sure the quality of audit also will improve drastically. On behalf of SIRC of ICAI, I welcome our resource persons of this evening, CA Ramesh sir and CA Sundarajan, and express my sincere thanks to them for accepting our request and continuing the second day of this session. I also welcome each one of the participants of this evening, and my sincere thanks to them for active participation. In continuation of yesterday's program, today we will start the session, and I am sure we will try to complete all our queries to the extent possible. On behalf of all of you, I welcome CA Subhashini Ganapathy as a moderator to this second day of the program. Thank you so much, madam, for our continuous support. Now I request a moderator to proceed further.
Thank you, sir. In fact, this is indeed a very successful program to say, because all this bank audit sessions will be a kind of season, like there will be a session, and later all the questions are generally done offline, so that there is probably like this kind of sessions will really bring in better quality and consensus among the members to understand what the other members' ideas are, or what is the best opinion type of a thing. And it's been very, very successful, and for us it's been a pleasure taking up different kinds of questions, and with eminent speakers like Ramesh sir and Sundarajan sir, it's been absolute pleasure. And today I would like to start the question with Ramesh sir, of course, like with the latest circular which the RBI issued yesterday, and of course in line with the NPA classification. So generally with the moratorium which the RBI has given and the Supreme Court judgment which lifted the stay on 23rd March, there are issues in classification of NPA. So this 180 days and later 90 days, or how do we calculate that particular 90 days to classify this as an NPA is first part of the question. Then to upgrade it from NPA to normal, in normal course of time, account classified as NPA should be fully serviced to become an upgraded account. And in this case, should we really collect the payment due for that 90-day period, or the 120-day period, or the entire period to upgrade the account? Because yesterday's circular gives a different view. Ramesh sir would like to take your insights.
Good evening, everybody. Thank you so much, Subhashini, for drafting that question very well. In fact, before we go on to the RBI circular itself, I think I would like to draw the attention of the members to the Supreme Court judgment which is delivered. The crux of the judgment is they had, said that no relief is available for quite a few things. The petition had actually asked for lots of things. Among them, Supreme Court said they are not allowing total waiver of interest during the moratorium period. They are not extending the period of moratorium. They are not extending the period of invocation, which is 31st of December 2020, as provided by the 6th August circular. They are not in favor of sector-wise reliefs, and further reliefs to be provided also they are not in favor of. The only thing they said was, in case of interest on interest / compound interest / penal interest. This is a different matter, and they would like to have a detailed view on this. They give a completely different view for only this question. So out of 6 or 7 questions, except this question, all of them are dismissed in favor of the government and not in favor of the petitioners. This is the only question they took up for detailed analysis. Of course, the other things also they did a detailed analysis. This question, they said, we will look at this specifically from the point of view of whether it is right to charge interest on interest during the moratorium period. And for this, they drew the interest subvention or the interest reimbursement that was promised by the central government for certain category of loans. Essentially, central government said that the compound interest charged on certain loans will be reimbursed by the central government to the banks. And what are those loans? MSME loans up to 2 crores, education loans up to 2 crores, housing loans up to 2 crores, consumer durable loans up to 2 crores, credit card dues up to 2 crores, personal loans to professionals up to 2 crores, consumption loans up to 2 crores. Now, this is what the Supreme Court found as discriminatory and arbitrary. They said, where did you arrive at this 2 crores? Does it mean that if somebody has a 2 crore, 1 crore 90 lakhs of MSME loan and also has, or 1 crore 99 lakhs, and also has about 2 lakhs credit card dues, then he doesn't become eligible, while the other MSME units become eligible. So they gave certain examples and said this is completely arbitrary and discriminatory, and therefore they gave a view that all interest on interest, compound interest, and penal interest should not be charged with the banks during that moratorium period. And if it has already been charged, it should be refunded to the borrowers or should be adjusted against the future interest dues. Now, the question was, what did they mean by penal interest? Now, supposing penal interest has been charged for some infringement of the sanction terms, is there also to be included here or not? If one goes through the Supreme Court order in line by line and try to understand it better, I think the word penal interest here refers only to the penal interest, which they are saying is interest on interest, and not the other penal interest in the bank parlance, which is for non-compliance of the sanction terms. So, if for non-compliance of sanction terms, a penal interest has been debited, Sundar doesn't agree with me, but if you read through the Supreme Court rulings, it is very clear that they are referring to penal interest only as interest on interest and not for anything else. Therefore, in my opinion, if there is a penal interest that is charged for, let us say, some infringement of the sanction letter, although it won't be for non-submission of stock statement, as we all discussed yesterday itself, that during the COVID period, one doesn't, and then there's a complete lockdown for 2.5 months, nobody expects the borrower to submit a stock statement. But if the penal interest is something else, then that obviously will be applied. In my opinion, it should be applied, it should be charged, and that should not be waived off. Coming to the Supreme Court, to the RBI circular, the circular itself starts out with the preamble that this is in the circular they issued consequent to the Supreme Court order. Now they talk when this RBI draws reference to this Supreme Court order and says the moratorium, the interest to be refunded, the compound interest to be refunded will apply to all borrowers, including those who are availed of working capital facilities during the moratorium period. So if somebody had taken a working capital facility during the moratorium period, not even an old loan, a fresh loan that was sanctioned during the moratorium period, on which compound interest was applied by the bank, even that has to be refunded, irrespective of whether the moratorium has been fully or partially availed or not availed. So, borrower, even if he has not availed the moratorium, they continue to pay his installments properly and all that, even he is eligible if there has been a case where he had not paid the interest for 1 month or 2 months during the moratorium period, the compound has been applied. Even that compound interest will have to be returned back to the borrower. In terms of the circular dated 27 March 2020 and May 23rd, 2020, which is the COVID regulatory package, in terms of those packages, if they are availed, not availed, or partially availed, or be the new borrower, in all these cases, compound interest is not chargeable. The sum and substance of this paragraph, in the third paragraph in the circular, is right across the spectrum of the banking borrowers, compound interest will not be charged from 1st of March to 30th of August. And that, if it has been charged, should be refunded to the borrowers. Coming to the asset classification. Now, they are making a distinction, which is what we discussed yesterday, but now it is very clear and explicitly stated in the RBI circular. If somebody has not availed the moratorium, or moratorium has not been granted to him, for deciding the NPA status of that borrower or that loan account, the normal IRAC loan norms will apply. I would like to read the paragraph for the benefit of the members tuned in. In respect of accounts which are not granted any moratorium in terms of the COVID-19 regulatory package, asset classification shall be as per the criteria laid out in Master Circular, Prudential Norms and Income Recognition, Asset Classification and Provisioning pertaining to advances dated July 1, 2015 or other relevant instructions as applicable to the specific category of lending institutions, within brackets IRAC norms. So If somebody had said, I don't want this moratorium, I will continue to pay my housing loan the way I am paying it, for him, the normal IRAC allowance will apply. It is a question whether he had availed of it or it was that he applied for it, but it was not sanctioned because he did not fulfill certain conditions. That is something which we need to look at. For them, the normal IRAC norms will apply. The last paragraph of asset classification says, in respect of accounts which are granted moratorium in terms of the COVID-19 regulatory package, the asset classification for the period from March 1, 2020 to August 31, 2020 shall be governed in terms of the circular dated April 17, 2020, read with circular dated May 23, 2020. For the period commencing September 1, 2020, asset classification for all such accounts shall be as per the applicable IRAC norm. So which means for that period, because with those two circulars saying delinquency days need not be counted, they will not be counted. For people who have availed the moratorium, that period from 1st of March 2020 to September 30th to August 2020 will not be counted for the purpose of delinquency. Starting from September, the normal IRAC norms will again apply. The only difference here being, if there have been delinquent of 40 days before 1st March, then you have only a remaining 50 days starting from 1st September and not 90 days. That is the situation in my interpretation of the RBI circular and the Supreme Court order. Sundar, I think you had some misgivings about my interpretation of penal interest.
Only on that penal interest. I'm 100% sure what you told about this other penal interest is acceptable, but there might be some situations wherein penal interest is levied because of overdrawing. See, the overdrawing penal interest will not be leviable. Once again, the reason is this period, particular period, that is March to August 2020, was specifically given for a specific situations. And once an account is not classified as an NPA as on 31st of August, until the Supreme Court order happens subsequently, that period, if the party continue to have some overdrawings. So wherever there was an overdrawing because of this, once it is not considered as an NPA, it will not be considered as an NPA. In that situation, if they have not paid the installments, etc., because of that, that is an penal interest which has been levied or triggered by the system. That also, in my opinion, has to be reversed. The reason being, they have said that penal interest will not be levied. The order finally it says that there will not be any penal interest which will be levied on account of this particular period of stay which is granted by the Supreme Court. So to that extent, they will get a benefit. But only $1 million question is, who is to calculate these penal interest? Who is to calculate this interest on interest, etc.? In my opinion, the branch auditors may not be required to do all these things because it will be done at the head office level. There might be, in my opinion, there might be, as what you call the audit report itself, we always say that we have considered all the transactions except the following which is being done at the central office. In that, this also will be added. If they are not added, and if the banks are not doing that, probably we'll have to add that line when you give the audit report. This is my thought process.
Just to submit again to what Sundar said about the penal interest, paragraph 31.1 of the Supreme Court order. I would just like to read one sentence from that. Even otherwise, it is required to be noted that compound interest stroke interest on interest, it is compound interest / interest on interest, shall be chargeable on deliberate / willful default by the borrower to pay the installments due and payable. Therefore, it is in the nature of a penal interest. So, when they say penal interest, they seem to define it as that. I'm not sure whether it was brought to their attention that penal interest can also mean not necessarily interest on interest or compound interest. Something which we need to take a call, or probably, you know, whatever the interest that has been debited, if they have reversed all the penal interest, I don't think anybody can find fault with you. Maybe something for to be noted, and if they are able to distinguish between that, maybe you can take a call that only on the interest on interest. Thank you.
Yes. So the next question to Sundarajan sir. In LFAR, like we have to comment on the audited accounts on the loans given to non-corporate entities. So here, what will be the limits for giving audited accounts for the non-corporate entities, and clubbing this with yesterday's questions where people ask, like, for small entities, if there are no financials at all, then how do we even verify the CMA data or the DP and the related stuff?
I divide the question into two portions. What is my responsibility to specifically report under that particular clause? That particular clause of loans given, working capital loans given to non-corporate borrowers. Corporate borrowers, always there will be an audit. That is why it has been excluded. As far as non-corporate borrowers are concerned, whenever there is a working capital finance which has been given in respect of more than 25 lakhs, previously it was given as 10 lakhs. This is a very, very old recommendation of Tandon Core Committee, which was very, very old. They have given a figure of 10 lakhs at some point of time, which has not been increased at all. This year, they have increased it to 25 lakhs. So whenever there is a working capital facility of 25 lakhs and above, in those cases, the person is supposed to have done a compulsory audit. What do you mean by compulsory audit? Is $1 million question. Once again, if the borrowing is only 25 lakhs, there is a possibility that the party is not covered under tax audit also, because 25 lakhs means probably the turnover is less than a crore. Once it is less than a crore, they may not be covered under audit under 44 AD at all. So in that situation, there will not be any audit. But what Tandon Core Committee recommendations at that point of time is, the account has to be audited by a chartered accountant to give a specific report. The report was as good as true and fair view. The report which is supposed to be given, we have verified the financial statements of this particular borrower and the assets and liabilities. I mean, the P&L account shows a true and fair view, the balance sheet shows a true and fair view, which is as good as Form 3C or 3CB as the case may be. So that report has to be brought in here. Even if that report is not there, anyway, our essay is there. 703, 704, all these things will be there, which will give you the standard format of the audit report. According to that, we have to give a report in case of a non-corporate borrower. I am repeating that it has to be an audited financial statements. Audited means it has to be audited by a chartered accountant, not by an auditor per se. Because very many places, the auditor sign the financial statement and say that as per books and records produced, or extracted from the books and records produced, are true and correct, certified true copy. All these things are not accepted as an audited financial statements. Audited financial statements means it has to be audited that the statements, financial statements has been, that is books and records has been verified. Financial statement shows a true and fair view. This is the only audit report which is considered to be under this clause. The next part, second part of the question is, what do we do in case of this? This one particular clause is, wherever non-corporate borrowers are there having working capital limit of beyond 25 lakhs, whether audited financial statements are there or not, you have to mention that. This one question over. But you go to the second question, where what do we do in respect of accounts where renewal is being done without the audited financial statements, etc. That's a separate question. It has two implications. One is, how did the branch management has satisfied himself that the turnover is really correct? How did they satisfy whether the returns which has been filed with the income tax department is right? Yesterday, in fact, one of the private banks, they came up with one branch auditor asked the same question. Sir, they have given a loan of 45 lakhs. They don't have financial statements, but they have income tax return which shows the entire turnover. They have a GST return which shows the entire turnover. Is that okay for me to conclude that? That is okay for the purpose of appraisal. It is okay for the purpose of monitoring if the management is satisfied, if the manager is satisfied. But it is not satisfying the requirement of the LFR reporting in respect of working capital loan beyond 25 lakhs. How it is satisfying to the respective branch management, it is for him to decide, and it is for him to declare that I am satisfied with the financial statements. In the appraisal report, he has to mention, and he can leave it like that. To that extent, we don't have to bother, we don't have to report, but at the same time, when it is a non-corporate borrower, we have to report in this particular LFA.
Yes, thank you. So the next question to Ramesh sir. So if we are looking at a scenario of an account for which like there are absolutely no repayments from April to August, then obviously like it cannot be classified as NPA, and with effect to the giving effect to the Supreme Court order, and until 23rd March, I am absolutely safe. If it is an NPA on 23rd March, probably like 4 installments due, should I repay or should I collect 3 installments or 1 installment to make it a proper account? When can I standardize that account? So once it is an NPA, then I have to collect all the dues pertaining to that and make the due 0 to actually upgrade the account. In this scenario of this 180 days and the March 23rd, how many dues should I collect, or how many overdue is permissible? to make it a standard account after it is classified as an NPA? Is it okay if I just keep it with below 90 days, or should I actually go by the normal IRAC norms? Given the RBI circular, which you really explained, that the IRAC norms will be effective from 1st September.
The question again is a lengthy question. I don't think an easy answer or ready-made answer is available for this, because there are certain facts missing. You said there will be no repayment from April to August. So I'm assuming that all the dues till March has been paid.
Okay.
I have to assume that all the dues till March have been paid. If all the dues till March have been paid, then he doesn't have to pay anything in fact, not even March. Till February, if it has been paid, is also sufficient. Then March, April, May, June, July, and August installment, he doesn't have to pay. So the first installment due is September, which is actually the original March installment.
Yes.
So September, October, November, and December. If these 4 months he has paid the dues as per the revised schedule, obviously the revised schedule is going to make the EMI, monthly EMI, a little more than what he was paying earlier. The fact that it is getting extended by 6 months, automatically the interest for the 6 months is getting charged, and therefore the tenor increased by 6 months, the EMI will also increase slightly, marginally. So if that new EMI has been paid for the month of September, October, November, and December, the account will not become an NPA. The fact that it is becoming an NPA on the 23rd of March 2021, if you give me a minute to work, it will probably be 31, 28, 23.
This is actually the question of CA Ravishankar. If I can just read the question, he's given it with the dates. Probable NPAs as on 23rd March 21 having overdues more than 90 days. This is even after considering the moratorium period from 1st March to 31st August. So that period is excluded, and it is a probable NPA on 23rd March. Whether the account head need to be fully regularized with 0 overdues to be treated as standard as on 31/3, or they can make remittances such that the overdues remain less than 90 days, so that like it does not cross the threshold to fall into the NPA category.
Typically, all the dues as on 23rd March should be, because the date of NPA is 23rd March. And the system, if it has marked as NPA on 23rd March, then if it has to be upgraded, even on 24th March, if he wants to come and upgrade and pays only the arrears dues to bring it within 90 days, it is not sufficient. The entire dues till 23rd March, which means even the interest accrued till 23rd March should be paid, and only then can it be upgraded. Otherwise, it cannot be. It cannot be brought below 90 days, and therefore it gets upgraded. No. Once it is marked NPA, all the interest that have not been serviced should be reversed, which is again a problem, which most of the banks miss out. They only reverse the interest for 1 month. Some of them classified as the NPA on 31st of March 2021 and reversed only the March month interest. Those are things that we need to look at.
Perfect, sir. Thank you. I think this will clarify Vishankar's
But
question.
one point is the amount due should be recovered. But once again, when the entire amount should be due to be recovered, once again from the March to August is not considered as a due at all. That members have to be very, very clear. March to August is not due at all.
In fact, I think the question also including the period.
So, financial year with 180 days. So I think that solves it. Yeah, thank you, sir. And I would like to get some insights from Sundarajan, sir. There are like a lot of doubts around restructuring. So there are 5 conditions for a restructuring, especially for it is for the MSME, the GST registration, fund-based and non-fund-based below 25 crores, and all the conditions documentation should be over by 31st March, and it should be accounted or recorded both in the books of the borrower and the lender. What happens if any of these conditions fail? Is the restructuring itself is invalid, or it is just the classification? So can you just explain?
Yeah, there are 3 circulars basically which has triggered this entire restructuring. It starts right from the 2018 onwards. It is not a new circular. 2018 there was a circular. January 2019 one circular was there. March 2018 one circular was there, and once again in 2020 there is a circular. All these circulars, all the 3 related restructuring circular was basically intended to give benefit to the borrowers who are affected by cash flow because of the GST introduction. So there are two components which has been made very clear by Finance Ministry and also RBI. What happens is when the GST was introduced in 17, so people suddenly said that all of us are finding short of money because GST has to be paid in advance. Whether it is collected from the members or not, they have to be paid, including the service tax element. So everybody went and represented. So immediately there was a clear instruction from Reserve Bank of India saying that those persons who are registered under GST and also registered under MSME, only when it's an MSME, because non-MSMEs will not be eligible for this benefit at all, because they are not having the, probably that was a, it might be a wrong perception, which we don't know, but RBI by its own wise counsel, it has decided that only MSMEs will be eligible for that. So MSMEs who are also registered under GST will be eligible for the restructuring. Yeah, again I repeat, everybody is eligible for restructuring. There is no restriction on restructuring, but for getting the benefit of continuing to classify the account as standard, we need to have the restructuring according to this particular norms. So there are 5 conditions that are available. One, it should be MSME. One, it has to be GST, and the loan should not be in excess of 25 crores. Why the 25 crores? Once again, for considering this, big borrowers are not getting benefit out of it. The 25 crores consists of loans from this bank, loan from another bank, and also loan from non-banking financial companies. Not only loans, exposure. Exposure means if there is a term loan which has been given to the extent of 1 crore, but the amount of disbursement only to the extent of 75 lakhs, balance 25 lakhs also has to be added into the exposure. So if all these conditions are satisfied, only an account can be restructured and continue to be classified as standard. If even one of the conditions fail, just for an example, I am telling you, the party is registered under GST, but the GST registration has been cancelled subsequently. GST has been registered, but he has not been filing the returns regularly, so suo motu cancellation has happened. GST has been registered, he himself has gone and voluntarily cancelled the GST registration. In any of these examples, this fellow will not be eligible for the beneficial treatment. He is eligible for restructuring, but he is not eligible for the beneficial, beneficial interpretation of this particular supplement. Beneficial treatment will not be available. Same way, the entire implementation has to happen before 31st of December 2020, 31st March 2019 or 20, as the case may be, according to the respective circulars. If that is not done, once again, the scheme fails. So, the scheme fails means restructuring will not fail, but the beneficial treatment will fail. So, whenever a person wants to take the beneficial treatment, he has to fill within that 4 walls of conditions which has been stipulated as per these 2-3 circulars, and if it falls within those circulars, he is eligible to be considered as a standard. If you miss out any one of those conditions, he is having a risk of not being considered for this beneficial treatment. Obviously, the branch auditors has to insist that this account has to be classified as a substandard assets and have the corresponding reversal of interest provision which has been made, interest unrealized interest, all these things will automatically follow. First item is whether it is a standard or substandard assets. Once that is happening, all the other items will follow it.
Thank you, sir. Just extending this question to Ramesh, sir. In terms of the interest, so Sundarajan sir was saying like about restructured accounts where it is not fulfilling all the conditions, then it will be a substandard account and the corresponding interest reversals, etc. has to happen. Now, even in the normal scenario where we have this moratorium plus the holiday until 23rd March, etc. In a case, there's a specific question from CA Divya from Coimbatore. She has asked, like, after 24th, the bank has actually, the effective date of NPA of an account is 31st December, but the bank has classified this account as NPA on 30th March and reversed the interest pertaining to 1 day, that is like 30th to 31st, and all others are treated as income. So how do we treat this interest, unrealized interest under the IRAC books?
Before I go into this question that you posed to me, I just want to add one thing to what Sundar was saying about the 25 crores aggregate exposure. It's please remember it is both fund-based and non-fund-based.
Non-fund-based.
Non-fund-based, that is something which slipped out of mind. He knows it thoroughly. I mean, if you ask him in the
it's an exposure, non-fund-based exposure also.
I think it just slipped out of his mind. I wanted to. And the second thing about that restructuring condition, when is implementation complete? Sundar rightly pointed out, the implement should be completed either by 31st of March 2021 by the August circular or by 31st December 2020. Now, when is implementation complete? Implementation is complete on all the documents that need to be executed in the borrower and the lender is executed in toto across the borrowers, across the lenders. For example, if he has one loan in one bank and also another bank or an NBFC, as Sundar rightly pointed out, in all these cases, the implementation should be complete. Now, let's take an example where it's a private limited company, MSME unit of a private limited company, in which case a charge might have to be created for additional facility that has been granted to them. Now, if the charge has not been created before 31st of March 2021, in my opinion, the implementation will fail. And if the implementation fails, it will continue to be restructured, but it will have to be downgraded. The question arises on 31st of March or 30th of March, they have filed the necessary papers with ROC, but they still haven't got the certificate of creation of charge. That I think is perfectly fine, but at least the process should have been complete. Now, coming back to this question, there seems to be a little confusion that NPAs to be marked only on 23rd of March because that is the date on which the Supreme Court gave its judgment. I think the Supreme Court delivered its judgment saying that the interim order is vacated, which means the NPA date can be any date. The bank should not be looking at if something had become an NPA between last year and 23rd of March. All of them don't become NPA only on 23rd March. The actual date of NPA should be marked, and that is the date that should be clearly mentioned in the NPA statement. The member has asked a question that the actual date is sometime in December, but they have marked it as March 31. Please ask the bank to change the NPA date to the actual original date that you have calculated according to the IRAC norms. The minute it is classified as an NPA, as a whatever date, all the unrealized interest of the entire year from 1st of April 2020 to 31st of March 2021, or the date on which they stop levying interest because they marked as NPA, all the unrealized interest must be reversed. Now, even if they had by mistake marked it as 30th March, the question of reversing interest for one day doesn't account for. It is the question of reversing all unrealized interest of the year. That needs to be reversed. That needs to be definitely reversed. If these two things have not been done to the bank, you should definitely and necessarily pass an MOC, changing the date of NPA, quantifying the amount of interest to be reversed, and if there is any interest, unrealized interest of earlier years, that should also be provided for. That is something which only you as the auditor can look at and do, because the previous year they will never take it and give it to you. Looking at this year, it is very easy to take out the figures. Please look at it and pass the MOC. Also mention this in your long form audit. Whenever you have an MOC, you should also have a note about it in your long form audit.
One point which has to be added. Is, first of all, the system, computer system of each and every bank will automatically reverse the interest for the current year if it is not realized once you identify as an NPA. Need not be on 23rd of March or 28th of March, whatever be the date. The system will automatically reverse the interest which has been unrealized. If in the case which referred by that lady member, if the interest has been only the last one day, it has been reversed, there is something tampered with the manual, something manually it has been tampered. The reason is the computer system is made up in such a manner that whenever an account is identified as an NPA during the course of any particular date of a particular year, whatever be the interest which has been recognized till that date, if it is not released, automatically will be reversed. The system will trigger that entry. If that entry has not been triggered, there is a manual intervention. As Ramesh rightly pointed out, the earlier interest we only have to identify. That will not automatically trigger. So probably the auditors have to take extra precaution on that day. But current year, if the interest is automatically not reversed, we have to be more careful, because now in this current year, we are also supposed to report in the long form audit report whether there was any manual intervention in respect of these reversals, in the respect of classifications. So in this situation, obviously there would have been a manual intervention, otherwise this would not have happened at all. It's a theoretical point which I got to tell you.
Ramesh,
I wouldn't say it is a theoretical point. It is a pretty valid point that you said. It is
no, I'm not saying theoretical point. The point which has been raised by lady.
My only what pops to my mind is, did they run a patch or something during this COVID period, because they did the system would have started automatically marking things as NPA, in order to remove that automatic marking, have they, run a code which has gone and paid havoc with the reversal of interest also. Because
Then
otherwise,
it's going to be a global problem. Then it is going to be a global problem for the entire bank, not only for the branch.
so the member, in fact, I request the member to look at this a little more deeply when she goes to the bank tomorrow. And if it is so, kindly call us and let us know so that we can also advise the other members who keep asking us doubts over the phone that they need to look at the complete system.
Perfect, sir. So
And
this,
you
the
can
next
also tell us in private which bank it is, not in the public forum. Maybe in private, member, the trading member can tell us. Subhashini, you can give her our telephone. At the end of the program, please give her our telephone numbers. She can probably call and talk to us also and tell us the name of the bank so that we can also warn the other members who are doing the audit of the bank.
Sure, definitely. So the next question is on the CC account, where we had discussed largely on the out of order and the NPA status yesterday. So today probably like a kind of revision, and there's a specific question where a account where there is continuous overdrawing beyond the limit, generally that is termed as out of order. And do we classify an account as an NPA just because it is out of order for 90 days, or only the interest is not serviced for 90 days? So which category, like which probably default will put the account as an NPA?
It's mine or like his?
So do you want to take this question?
Whose question? I don't know.
They take this question.
See, the point is very, very clear. First situation, once it's a working capital loan, the first identification of an NPA is whether the interest in respect of the last 90 days has been recovered or not. So if the interest itself is not recovered, then it becomes an NPA. So up to 31st of December 2020, if the interest has not been realized as on 31st of March 2020, straight away it will become an NPA. Once the interest is recovered, it is an additional point which has to be examined whether the account was out of order. So interest not realized, straight away it becomes an NPA. Other than that, we'll have to see whether it is an out of order also. Whether out of order means, once again, you'll have to go to the balance outstanding in excess of drawing power or sanction limit, whichever is higher. It has to be continuously for a period of 3 months, and then it is going to be out of order, then it will be liable. So first priority is interest. So 31st December interest hasn't been recovered? Yes, one tick. Then you will have to go whether it is an out of order in respect of the previous year, then you will have to classify.
Just to add to what Sundar said, he said interest as of 31st December. The circular says the interest debited during the quarter should be released within a period of 90 days. So it means interest for September, October, November, and December should be serviced by the fourth quarter, that is before March. Unfortunately, or fortunately for us, and unfortunately the bankers, none of the bankers seem to have understood this particular line in the IRAC norms. They don't even refer to the interest of the previous quarter to be realized this quarter. They talk about interest this quarter to be realized this quarter. I don't think we should go and educate them. Let them be like this, because we are safer if they take that stand. But the fact is, the IRAC norms refers to interest of the previous quarter being realized.
Up to the date, up to 31st December, interest should have been recovered. Let us be very, very clear. Interest up to 31st of December 2020 should have been recovered.
Should have been recovered before March.
Yeah.
So
before March. Very, very important point. Yes, one line comes to my thought process. It has to be recovered before 31st of March. Immediately question now from the members will come. If they have recovered on 3rd of April, can we go on what you call events occurring after the date of balance sheet date? Let us be very, very clear. RB is making it absolutely clear that events occurring after the date of balance sheet is your institute's predicament. It is not our predicament. You have to classify as on that date. So as on 31st of March, the money has not come. It should be classified as an NPA. Next month, it can be upgraded. There is an exception. What is the exception? If the entire loan is fully closed on 4th of April, then that account need not be classified as NPA. This is an exception which has been given. So let us be very, very clear. Events occurring after the date of balance sheet will not come to your help. Don't presume that we have delayed on the events occurring after the date of balance sheet accounting standards. So I have considered it is not acceptable. RBI is very, very categorical. The classification of an asset as a performing or non-performing as on a particular date, not subsequently.
Perfect, sir. So the next question is again around the DP computation. We did discuss this yesterday as well. So a member has found the difference. I mean, this question is from CL Lavanya Har. She's found differences between the stock statements and the stock in the financials, and the DP is calculated without considering the creditors. So probably like when she calculates it now, the DP is not as per the sanction terms. So she says, should I classify this as an NPA? Should we recalculate and classify this as an NPA?
The question is, can she recompute the NPA, and if it does not satisfy the norm,
can this be classified as that?
I won't say she can, I will say she should. I think it's only right that she should. Having noticed it, she must recompute the DP, but the only problem that she might have is, what is the level of creditors? That is something which is a little difficult to arrive at. So maybe even if she asks, if the branch is willing to call the borrower and ask him to give the level of creditors every month, that she can take. Or the creditors is mentioned in the financial, that she can take and have a correlation between the creditors and the top. Relatively same amount of creditors she can proportionate to, but I think she also needs to document that assumption that she's making regarding creditors. For X amount of inventory, this is the creditors as per the audited financials. So I'm assuming the same thing. In the absence of any other information, I think she should document it. She is not, again, to re-emphasize, it is not that she can, she must. And because of the recomputation of DP, she finds it is out of order and needs to be classified as NPA, she must do it. It's not that she's going to be doing it for the first time. Several people have done it. We have also done it in several cases. I think it is very well appreciated by the Central Statutory Auditor, the management, and RBI.
Perfect, sir. Sundarajan sir, again, this is also a kind of repeat question, but I think it is worth doing it again. The question is around the large advances, the 10% and 10 crores, which is changed now. And there are questions around, like if it is an agricultural advance branch and the total advance is 180 crores and the number of advances is like 100, should I report everything, or how do I report it in the LFA?
See, I had explained yesterday, and today may not be the same members will be there. For the purpose of benefit of the members, let me repeat once again. This our number of accounts to be verified, or what is a sample to be verified, all these things are audit perspective. It is on the respective auditor's perspective and also size of the branch. See, if you are able to cover even 50 accounts, which will be covering 50% of the advances. If there is a 3,000 accounts which is there, and by verifying the 50 accounts, you are able to cover 50% of the advances, it is good enough. Even though there is no large advances in this particular branch, by way of this 10% and 10 crores limit, if there is no large advances, if I'm able to cover 50 number of advances, which will cover 50% of the advances, is good enough. But only thing is, we have to ensure that other types of advances also should be covered. This is what I was telling yesterday. Let us understand what is large advance. We have to decide 10% or 10 crores, whichever is lesser. That's first side of it. Once you identify the large advance, all the large advances has to be examined. In a particular branch where there are no large advances at all, and there are 3,000 or 4,000 number of accounts, it is not definitely necessary to verify the entire 3,000 accounts or 1,000 accounts or 500 accounts. There is no compulsion as it is. You list out the top accounts. There can be 25 lakhs accounts or 50 lakhs accounts or 1 crore accounts, as the case may be. List out the top 20 accounts. If you cover the top 20 accounts and consider, because of this, for example, there is a 20 crores branch, and if you are able to identify top 20 accounts, which will cover around 3 crores of advances, so 3 out of 20 is reasonably good enough, and we can leave it as 25% advances has been verified. This is first bucket. Then, in respect of other advances, you list out those advances and pick up from each and every item. For example, if it's an agricultural based advances, in fact, yesterday, one of my partners have gone to a particular branch where also I have suggested the same thing. Out of 28 crores of advances, 23 crores of jewel loans is there. So I have told him, you don't have to verify the jewel loans, but at the same time, pick up top jewel loans, bottom jewel loans, 10 and 10 here and 10 there. Ask the appraiser to come and verify. Ask a third party appraiser also to come and verify. Examine this and give a list that these accounts has been verified in detail. Also verify the documents. In this process, what happens is, he has verified around 40 accounts out of 4,000 accounts, but these 40 accounts cover at least 3.5 to 4 crores. So in that situation, if they are able to, that is includes agricultural loans also. So in this situation, if these areas cover that particular percentage, what is the threshold? Whether it is 25% should be verified or 60% has to be verified, 50% has to be verified. There is no standard rule which has been given. Once again, it goes to the same method of deciding on the audit sampling. What you are comfortable with the sampling as far as this particular bank is concerned. If you are comfortable with that sample, you can go ahead with that and leave it. Balance advances, you have to verify, because all the types of advances has to be verified, because we are supposed to comment on whether the system of advances verification is properly done. System of advances classification is properly done. Whether the system of credit appraisal is there. Process, I'm talking about process in respect of other advances. For verifying whether the process is properly done or not, you are under compulsion to verify all the types of advances. So you have to necessarily go through all the types of advances, at least 10 items in each and every case, to identify whether the process is properly done.
Sundar, I think most of the members seem to have this question, in continuation to the question that you answered now. There are no large advances. And you are referring to, even if you verify 10 top advances of the branch, you would probably be covering 25-30%. But we could have cases, and I'm sure there are lots of rural branches where the total advance is about 60 to 80 crores. The average ticket size is about 2 to 3 lakhs, which means you have something like 3,500 to 4,000 accounts, and even if you verify the top 20 accounts, you won't cover even 5%.
Correct.
In this situation, what's the kind of sampling is, I think, what is really bothering the minds of the members. So if you can throw some light on that, that would probably be.
I'm just telling you, I will tell a classic example of a private bank where the maximum advances are only jewel loans. I'm taking a classic example of one particular branch in Moderator. Let us say that the unit is at Moderator branch. Total advances is 22 crores. 20 crores is jewel loan, and 2 crores consist of only housing loans and loan on deposits. This is the entire structure of the branch. In that situation, I am damn sure that you are not bound to verify this 20 crores of advances to cover to the extent of 10 crores. That is not required at all. Definitely, it is not required for us to satisfy ourselves that 10 crores of advances, which is 50% of the advance, has to be verified. That is not my compulsion at all. It is sufficient if I am able to satisfy myself that 2 lakhs, at least 25 or 30% of the advance, 30 number of advances is being verified, and the system is working perfectly, number one. Second issue, whether these loans advances, there is jewel loans which has been given, all jewel loans are given for only 1 year. This we have to be very, very clear. Non-agreed jewel loans are given only for 1 year. So in that situation, all the loans outstanding as on 31st of March 2021 will be 1 year loans only, or maximum 1.5 years loan, because any loan which is beyond 1 year, 90 days, it becomes an NPA. Agriculture loans, once again, there will be 2 years loans. After this, once again, crop seasons will come into the picture. So whatever it is, there will not be any jewel loans which is outstanding before 31st of March 2018 or maximum 31st of March 2017 in respect of agri loans. So in that situation, it is sufficient for you to cover even 20% of the advances. That will be sufficiently covering the sample which you are supposed to verify. This I am telling you it with the conviction. The reason is, people will once again come and say that so-and-so has told on that day, so I have covered to the extent of 20%, I am convinced. Once again, I leave it to the respective branch auditor to get himself convinced by seeing this 20 or 100 accounts or 50 accounts, or as the case may be. You are comfortably convinced that the system is working perfectly. You can leave it at that level. You don't have to go beyond that level. If you are not convinced with the system, even if you verify the 100 or 1,000 accounts also, you will not get convinced with the system. Then it is a different issue, ball game altogether. So I am once again repeating for the benefit of the members, there is no standardization to the extent of you have to cover at least 50% of that. It is not the case. If you are satisfied with the 20% of the advances covering, you are able to satisfy that system is working perfectly in the branch. You can leave it like that, provided that there are no large advances. If you have large advances, see, even the 2 crores of advances, which is other than jewel loans, definitely there will be housing loans. If you verify all the housing loans, 10 loans are there, you verify that 2 crores is covered out of 20 crores, which is 10%. So to that extent, you can be rest assured, but please be sure that you mentally get satisfied that the system is working perfect.
Perfect, sir. So, Ramesh sir, can you just throw some light on the agricultural advances? There's a question that agricultural advances was restructured in 2017, September 2017, with a long-term crop. So, will that be classified as an NPA now, assuming that there are no payments from the account?
Subhashini, there's something wrong with the communication in my system. I couldn't hear the second part of the question. Can you repeat that, please?
So in case of an agricultural loan, which was restructured in September 2017 for a long-term crop, which is 12-month period, no credits till date, will that be classified as an NPA as of 31st March 2021?
It's a pretty difficult question to answer again, because this will depend on the terms and conditions of the sanction.
Restructuring.
Of the
So there's a
restructured sanction.
specific question from one of the members, K. Panduranga, so I thought it would be like...
Yeah, it's a very good question, interesting question. See, agricultural loans can be restructured, not even without the head office sanction. It can be done at the regional office level, provided the board has laid down a policy wherein the discretion or the discretionary powers have been handed over to the branches or the regional offices. I actually want to draw the reference of the members to the particular circular issued by Reserve Bank of India as far as this is concerned, in which, just give me a minute to get that circular.
Yes, sir, sure.
What happened?
No, I'm just trying to get that circular on natural calamities. I wanted to read out for the members' sake that it's been given. Just give me a minute. I should be able to get that.
Should we take a quick question from Sundarajan, sir?
So Sundar, I'll get that circular.
Perfect. Thank you, sir. Sundarajan, sir, there's a question pertaining to the financials. There are no provision made for the GST, electricity, etc. Should there be a item for MOC?
There is no provision made for GST.
GST payable, electricity, rent for the month of March.
As far as the branch is concerned.
Yes,
Branch
level.
But in my opinion, as far as branch is concerned, GST is not coming under the branch control. It is coming at the head office level. But rent, electricity, etc. Once again, we have to see what is the consistency of that treatment, because every year, the last March also it was not provided. So which means the current year 12 should have been provided for. Probably they are making a consolidated provisioning on a consistent basis. But last year they have provided for, this year they have missed out. We have to provide for it. But as far as GST is concerned, GST and TDS, normally it is done at the head office level. So branch will not be making any provision as far as GST and TDS is concerned.
Okay. So we should look at the policy of the bank, and then if at all the policy of the bank is to make provision at the branch level, then this
we have
will
to make provision. MOC has to be passed. And once again, when it is an MOC, reasonability has to be there, because banks have the amount of 10,000 rupees in certain branches, 20,000 rupees in certain branches. That is, if the MOC is less than that, it will not be recommendatory for the members to provide. Only place where that materiality is not there is in case of NPS. NPS, even if it is 1,000 rupees, I have to make a provision. Whereas in case of normal MOC by way of interest expenditure by way of rent, electricity, etc., if the quantum is 10,000 rupees in respect of certain banks, 25,000 in respect of certain banks, depends upon the policy. In the closing circular itself, they say, kindly don't give MOCs in respect of expenditure, because all these expenditures are provided at the different level. So on that basis, we have to make a provision.
Okay, sir.
Huh?
Yes, sir. Ramesh sir is looking for. Meanwhile, like Sundarajan sir can start using the.
I can go ahead with it.
You got it?
See, the circular was issued on March 25th, 2015. It lays down the guidelines for relief measures by banks in areas affected by natural calamities. And the formulation of the scheme for restructuring itself need not come from the bank head office, but it should be by the state level banking committee. because the state level banking committee is the one which decides which is the district which has been affected by natural calamities, and based on the severity of the calamity, they are empowered to suggest means of restructuring. This circular goes on to lay some processes and procedures to be followed for the purpose of making a distinction between drought and other calamities. So for each one of them, there are different guidelines given. But the sum and substance of the whole thing is contained in say, paragraph 6 of the circular, which talks about restructuring and rescheduling of existing loans. It says that for short-term production credit, that is crop loans, short-term crop loans, one type of restructuring, and for long-term, it's another type of restructuring. But in all these things, what we need to understand is the repayment period of restructured loan may vary depending on the severity of calamity and its recurrence, the extent loss of economic assets and distress cost. Generally, the restructured period for repayment may be 3 to 5 years. However, where the damage arising with the calamity is very severe, banks may at their discretion extend the period of repayment ranging up to 7 years. And in the extreme case of hardship, the repayment period may be prolonged to a maximum of 10 years in consultation with the task force /SLPC. So if you're talking about a loan to restructure in 2017, I'm not sure whether we can classify it as an NPA today. For a simple reason that we need to look at the sanction letter and see what are the conditions that are laid down. The fact that no interest, no payment has come might itself not be a convincing factor to classify this account as an NPA. Now, if you go to long-term crops, they're talking the same thing. In fact, they go on to add that you can even, you need to look at the repayment of almost 10 years. And therefore, I don't think you can come to a conclusion with, because there are no credits, it should be classified as an NPA. We need to look at the restructured sanction letter. That would have clearly told what is the moratorium period, when does the repayment start. If it starts in an installment basis, then has that been complied with, something we need to see. If there are no repayment of the moratorium period granted also for repayment. I don't know whether the loan that has been given to them is for a plantation crop, which has been severely affected by drought, which means they'll get another 5-6 years of moratorium, not only for interest, also for principal, because the fruit, the economic viability of the project has been affected. So I think we need to certainly look at the sanction letter and then look at it. Now, how do you classify these accounts? Also has been described in the circular. They're talking about additional finance has been given. That account need not be classified as NPA, while the original loan probably needs to be classified as NPA, even if they have not met the condition, the restructured sanction conditions also. They have not repaid it during the period. So I would request the member to take a look at the sanction letter, not just look at the operation of the account, look at the sanction letter. Based on the sanction letter, let them look at the IRAC norms and then decide whether it's an NPA or not. Again, I'm open for to look at the problem that the member has posed with more facts. He is free to call me or Sundar anytime with the full facts, and we can certainly give our opinion or our viewpoint on the subject.
To explain this with an example, to explain the same case with an example, if the restructuring sanction says 2017 it has been restructured, and they say the installments starts paying from 1st of April 2019. I'm just taking a classic example for the members to understand. 1st April 2019, the repayment should start. In that situation, for 19 to 20, they can wait for 1 year because it is a one crop season overdue can be there. After that, it will become an NPA, which means 2021 it will become an NPA. But if the repayment term says that 3 years there is no payment at all, the first payment starts only in 1/4/2020. Then they can wait for one crop season fully, because being a long-term duration crop, it will become an NPA in 2021-22 only. As Ramesh rightly put, we will require more facts from that. If the member has a facts, let them send the statement, we can work on it.
In fact, to add to what Sundar was saying now, the circular also says, in all cases of restructuring, moratorium period of at least 1 year should be considered. So it's only at least 1 year.
At least.
Which means they have the power to grant more than 1 year moratorium also. So it will definitely depend on the sanction letter and the SLBC circulars that have been issued that year. That's something which they need to look at.
Sundarajan sir, this is a question for you. if there is a discrepancy in the fixed assets, where do we report this in the LPR? Will this be a responsibility of a branch auditor?
Fixed reserves of the branch.
Yes.
See,
Can I take the
there is
question?
a.
Can I take the- Again, you have a memorandum of changes for it.
No, changes will come, but very rarely it comes. The reason why I am telling this is, as far as furnitures are concerned, they call it as only furnitures and machineries. They don't call any other. There is no properties in respect of the branches normally. So when they say at SFPM, say furniture, machines, etc., what happens is every year the schedule will go to the head office and they will send back the assets list. On that basis, they also provide the depreciation and send it across to them. What will not be considered for the provision as far as depreciation is concerned, only in respect of assets added after 31st of December. This is what normally happens. So up to 31st December, in cases, they would have already sent the depreciation statement itself. We are supposed to only affix our signature and go. But having raised this question, definitely there is a possibility that there can be a difference. One classic example is, I would have given some advance for machinery. It will be kept under loans, advance for computers installations, etc. Computers would have come. It has gone for the approval of the zonal office. Zonal officer would have given the approval, but the branch has not accounted for those assets. I necessarily, once this bill is received, approval has been received from zonal office also, then I have to necessarily capitalize in my books. I have to pass an MOC. Not only the fixed asset MOC has to be passed, I also have to pass the entry for depreciation also. So MOC, you will have to pass for the capitalization of the asset. Corresponding depreciation also I have to capitalize, pass the entry. Both MOC I have to keep it.
Just to supplement what Sundar said about this, in fact, today, what the question where there is difference in fixed assets was rampant about 10 years back. Today, as you rightly pointed out, the system is completely changed. It's not even December 31st. Today, most of the banks have moved to almost February 15th. Till that date, they cut off, and then after that, they've given very clear instructions that there should not be any further capitalization, and they ensure that there's no capitalization. But in spite of it, sometimes what happens, and they also give an instruction saying there should be no transfer of assets from one branch to another branch. This invariably happens when an officer is transferred from one branch to another branch. The furniture and fittings in this house are all in the books of the branch. Even that, there is a circular which very clearly states that you will not transfer it during the year. If it is after February 15, then you should do it only after 1st of April. Although the officer has been transferred before March, because after all, they continue to be assets of the branch of the bank. Whether it remains in branch A or branch B does not make a difference. But without taking cognizance of the circular, some of the branch pass the entry for transfer of assets from their books to the other branch where the officer has been transferred, and this might result in a mismatch. Whatever it is, they would. It has not to be correct not only in this branch; it also has to be correct in the branch. An MOC can pass for this kind of differences if they come across these differences.
Perfect, sir. So in terms of the provisioning, there are a lot of questions around provisioning in terms of the valuation report being older than 3 years, valuation, the valuation report value being different between the manually entered, which is entered in the system, and the one which is there in the report, and educational loans on which like there are like guarantors. In these cases, like how do we make the provisioning?
It's mine or Ramesh?
I just answered yours.
The first point which has to be made it very clear is, as far as NPAs are concerned, every 3-year valuation has to happen. This is one side of it. But once an account is classified as an NPA and it goes beyond 3 years or 4 years or 5 years as the case may be, it will have automatically shifted to D3. Once an asset is shifted to D3, it would have been provided 100%. Even though it is a doubtful asset, the provision would have already been held at 100% provisioning, which has been done. So in that situation, you don't have to bother whether the valuation certificate is available or not available. Even if the asset itself is not available, you don't have to bother because already provision is made 100%. This one side of it. Let us understand of an NPA which has been identified in 2019. So 2019 means 2020 it would have been doubtful one, and 2021 it is doubtful second year. Second and third year will be the same bracket. Provision will be made to the extent of 40% of the secured value itself. At that time, the security evaluation has to be done. And if there is a discrepancy between the security evaluation today and as per the books and records of the particular branch, then we will have to see whether the erosion is beyond 50%. If the erosion is beyond 50% from the date at which it has been taken, it has straight away taken to doubtful asset and provision has been made. And if the erosion is beyond 90%, it can straight away classify it as loss asset. Once it is a loss asset, the provision is made 100%. So even in case of doubtful asset, it is provided to the extent of unsecured portion fully and secured portion 40% in case of second and third year. And if it is more than 3 years, straight away it will be classified as 100% provisioning which has to be made. So provisioning, while making provision, you have to necessarily see whether the asset has been evaluated when, what was the last valuation certificate. This is very, very relevant because once an account becomes an NPA, nobody will be monitoring the asset at all. Nobody will be monitoring the security at all. You can very well say, sir, where is the security going to go away, sir? All the immovable property will be there. No, immovable property also gets moved. How is it moved? Let us be taking a very, very classic example. There was a property which has been taken. This example I always give in all the lectures because only by example we understand in a quicker manner. There was a property which has been given as collateral security in respect of in Telangana. Now Telangana, at that time it was Hyderabad. They have given as a collateral security. That collateral security is a third party security. It is not belonging to that particular borrower. The account has become an NPA. That collateral security has been raised when it was widened. The property was widened, it was raised, and the property itself was not there. So when subsequently, when the asset was went for a verification, only 30% of the building was there. Balance 70% of the building is already taken over and it has been acquired or whatever it is. And its compensation was not received because that particular owner has gone for appeal. He was not accepting the what you call the compensation. If the compensation has come, probably the money would have been recovered, all these things would have happened. But in this particular example, when the security was taken, it was 10 crores. When the subsequently the situation has happened, it become the valuation is only 2.5 crores. So effectively, the asset has already been eroded, erased, or it has been removed from the security availability itself. So wherever NPAs is there, it has to be periodically evaluated. Only at the time of valuation, the valuer will go and see the asset, whether the asset is available there itself or not. Then only it can happen. So we will have to see in respect of any assets for that matter, any non-performing asset, valuation should be recent. In respect of non-performing assets, once again, it has to be evaluated recently. For NPAs, there is a statutory responsibility that every 3 years it has to be evaluated. When a revaluation happens once again, please ensure that whether the erosion is beyond 50% or beyond 90%. If it is beyond 50%, you need not classify it as substandard, straight away go to doubtful asset. And if it is beyond 90%, straight away classify as loss asset. Accordingly, provision will be made.
Just to
Yes, sir.
you get
Yes,
a
sir,
number
please
point on the valuation report. Most of the values give three figures there. One, the guideline value. Two, the market value. Three, the distress sale value. Which is the value that should be considered is something which I think you need to also elucidate on.
See, once again, the valuer is supposed to give 3 values, and also they are supposed to give a fair market value, which they will, for example, I will take a classic example of recently the lands has been evaluated very highly in respect of Andhra, New Andhra. So in those cases, the valuation market value will be very high, whereas the guideline value will be very low. So in my opinion, if the valuer is able to give a fair market value, I will be reasonably going to the extent of fair market value. If there is no fair market value given, I will prefer to go for a conservative basis. We'll have to go for a distress sale value rather than any other value.
Perfect.
Because realizable security, realizability of the security is important. We'll have to go for the distress value.
Sorry, Subhashini, I seem to be taking over your job.
Perfect. I mean, it adds value. Thank you for that.
So the next question to you.
Sorry, no?
The next question is to you. You need to take my job.
Because this involves income recognition classification and reporting in LFIR. This is one question from the live audience, Avinash. He says like there's a CC which was given, working capital loan which was given, where the DP and the sanction limit are one and the same, and it is not changed since ages. No stock statements received. the internal audit, the risk assessment report also mentions this difference. So how is he to deal with this? Should he classify this as an NPA, or, I mean, I think the question is to both of you. You will have enough points to add.
See, there are certain banks which offer a working capital facility called a trader's loan, or it's called by different names in different bank, where according to the terms of the loan itself, stock statement need not be submitted on a monthly basis, enough to be submitted on an annual basis. In fact, most of them have some other collateral security also, or the primary security also is different. If you referring to a case like that, then the answer will be completely different, because it need not be classified as NPA because of non-submitting of stock statement. But if it is the regular working capital, the DP and the balance outstanding, or the DP and sanction limit being always the same, it strikes me as something which is not possible, statistically impossible. That means a stock that is holding on a monthly basis, continuously the same stock. So take an example of the DP sanction limit is 10 lakhs, and let's say the margin is 25%. Then he should be holding about 13.3%, 13.3 lakhs is the stock that he should hold to have a DP of 10 lakhs. But every month he is holding the same amount of stock is unbelievable, not possible. So there's something seriously wrong with it. So if it is a regular working capital loan and stock statement has not been released for months together, ask him to close his eyes and blindly clarify to the NPA, because the DP has already become zero.
One point here is it is 100% secured by a collateral security.
I don't think you should consider the collateral security at all for the purpose of classifying it as a non-performing asset. That's why I said there might be a case where it is a trader loan or something like that, which is totally different. Then you look at the sanction time. He said the entire loan to be repaid at the end of 18 months or at the end of 2 years could be there. I think Canara Bank has this kind of a loan. So ask him to look at the product of the loan. Otherwise, he can just simply close the eyes and classify the NPA and reverse the interest also.
Classification on NPA does not depend on the security. Let us be very, very clear. Classification of an asset between standard and substandards, performing and non-performing, does not have any, that is the value of the security which is available, does not have any hold on classification of account as a performing or non-performing. An account will be performing as long as it is performing. What do you mean by performance? In case of a working capital, interest has to be served, drawing power has to be there. It's a twin condition which has been given by Reserve Bank of India. One, interest should be regularly recovered, serviced. That is one item. Second item, the drawing power should be maintained. As he rightly put up, the point is there are lots of loans which is given. That is, drawing power itself is determined on the basis of the property. That is, 60% of the property will be given as drawing power. So, for example, they gave a property to the extent of 50 lakhs. 60% of the 30 lakhs will be considered as a drawing power. Sanction limit is also 30 lakhs. There is no doubt at all. In this case, there is no doubt at all. It can be continuously 30 lakhs only. Every year, they will be giving a stock statement only for the purpose of complying with the stipulation of the sanction ticket. Every year, one stock statement will be given. That stock statement will never be on 31st of March. It will be on 25th of March, because 31st of March balance sheet will give a different figure. That is the reason why they will give a different stock statement. Let us not go into that. But whether it has to be classified as a performing or non-performing asset depends on the performance of the asset. But either way, whether it is the same drawing power, same sanction limit, all these things will definitely attract a report in the long form audit report under the monitoring. Under the monitoring, whether the branch has monitored, just receiving a stock statement and summarily keeping it in the file is of no use, which means the branch is not doing a proper monitoring. So monitoring has to happen wherever working capital loan is given, even if it is on the basis of a security of a property, whether the business is happening. If the business is not happening, it is a potential NPA. So it will definitely close at some point of time. At that time, the property has to be gone for liquidation, which will never be able to be liquidated at all. So point is, classification of performing or non-performing doesn't depend on the security value. Let it be 100 times the value of the loan also, it does not have any value, except for loan and deposit.
Otherwise, if security played a part in classification, then gold loans can never become NPA.
Correct. Gold loans also, correct.
But IRAC norms circular very clearly says gold loans are not exempt from
Not
IRAC.
exempted from particular.
So it's one peculiar question which says like the account is regular, OD account, the staff OD is regular, but it is classified as an NPA in the system. It's usually the other way around. So there are no further facts. So if we can throw some light on this with the given scenario, it will be great. Otherwise, like we'll move on to the next question.
It's a staff account, is it?
It's a staff OD account, and CA Balaji, he says like on his monitoring of the account, on his glance of the account, he feels the account is perfectly regular, but the system has classified this as an NPA. Could be because of some other account being classified as an NPA in some other branch, or maybe in those lines.
I can think of two things. One, yes, maybe there is a fraud committed by this staff. Once a fraud has been committed by the staff, then all the accounts are classified as NPA. So maybe that is the case. He probably needs to ask whether there was a fraud. He might not have committed a fraud in this branch at all. It could have been some other branch. The loan is here, or it could have been committed even 2 years earlier. It could still be operating. Still, he could have been reinstated after suspension. It could have been reinstated, but the process is not over. The judicial proceedings is not over. So maybe that's the reason why it is like. Otherwise, there is something wrong. And I'm sure Sundar would love to jump in and say, there is a manual intervention in this loan account. Please look at this in report, non-com audit report. So there's obviously a manual intervention, or the software is completely wrong. And I don't believe the software can be that wrong. So
that's exactly. Manual intervention can happen to make an irregular account regular, but vice versa, I don't think anybody would.
Not this. So probably there's a fraud or something.
Probably a fraud, or other loan account in some other branch becoming NPA. This account is also an NPA.
Right. Normally, a staff loan account doesn't become an NPA. They don't allow it to become an NPA like that. So even, or it could be, as you rightly said, we saw a case like that. Yes. Now I'm able to recall. It was a loan, education loan taken by an AGM of the branch on behalf of his son, where he had stood as guarantor. That education loan became an NPA, and the bank asked all the loans of that staff to be marked as an NPA. Maybe that's something like that. So we need to look at. Although there is no really reason for marking the accounts of the staff as an NPA, I think they took a very conservative view at the.
They have enough sufficient security to hold back.
Absolutely. And you can't blame the bank for doing that, because IRAC norms only says minimum provision that should be made. It does not say that other things at the district of management they are marked as an NPA, for whatever reason. That was, I think, the finding of the disciplinary committee of the bank. So,
should be those reasons.
We need to talk about this loan to the manager to get more information.
Yes, sir. So the next question is from CA Prasad. So he had asked the question pertaining to the provisions, like provisions for rent, electricity, etc. He is just extending his question to say like the GST, the other income GST should be 18%. So I think he means 18% should be grouped under other income, and the taxes to be debited this side. He says there is a difference in the collection and the rates and taxes. To read his question verbatim, continuation to my earlier question, GST on other income should be charged at 18%, and the same has to be reduced from income collected, but amount reduced from other income is less than 18%. How do we treat the same?
Again, I repeat the same earlier reply. GST is never done at the branch level, because I doubt whether it is done. So in that situation, each and every branch, if they do the GST computation to do this, there is definitely a variation. It's a surprise. If there is a variation on that item, yes, definitely we can pass an entry. But only thing is, before giving an MOC or giving a suggestion, he should be 100% sure of what he is telling, because we should not go and give a wrong input and wrong entry. Will become a laughing stock. That will not happen. The reason is, the system is made up in such a manner in respect of GST, what do you call GST, I don't say, system, in the computer system, the GST computation is automatically done it. Now, see, once you put up a bank charges of 5 rupees, automatically 90 paise is being calculated. Same way, on the other income also, whenever you have other income, what is other income? Commission can be one income, bank charges can be one income, a locker rent can be an income. Automatically it is trigger 18%. There is no manual intervention at all in respect of these items, so there cannot be. One possibility is, there is only one possibility, if they have disposed of some items in the miscellaneous income is there is a miscellaneous income, they were disposed of certain items, etc. In that situation, they would have received the money that they have not declared this GST or whatever it is. That's a possibility. So we probably will have to examine whether the other income includes, which is an item which is done at the branch level, which did not collect the GST as the case may be, that they will have to make a, it's a very, very rare case. I don't see which is possible on a regular item. Anything extraordinary, we have extraordinary branches which can happen. Same way, if there's an extraordinary situation, they will have to look at that independently. It's not a normal item. That's what my point is.
Perfect. So first, you check the calculation.
And as far as GST is concerned, I don't see any other person who can explain beyond Subhashini. Probably you can add value into this.
Just to add to what Sundar said, I completely agree with Sundar when he said that it is not handled at the branch level at all, because the system automatically calculates the GST and the GST payable is accounted there. The only place where the branch has a role to play is in the claim of ITC, because on their purchase they have made, they are expected to send the data to the regional office or whichever is the office which is consolidated with GST. They have again, that's also a software provided where they just key in what is the amount of the bill that they have paid and what is the ITC, that the consolidating office or the consolidating regional office takes care of that and claims the ITC. Other than that, there is very little role to play for.
And also
RCM. There is an ITC and also RCM. ITC on rent. Most of the branches pay rent on which there is an ITC element. So that is to be captured, and it is not captured in the system. It is manually entered by the branch and sent to the regional office, and the regional office passes the necessary entry for it. So if there is still a doubt in the minds of the member, and he finds that the amount is significant, I would suggest that he check his facts 100% and then pass an MOC. If the amount is not significant, I would suggest that he not pass an MOC, but draw attention to the non-form audit report so that if there is an error, it can be taken care of.
Perfect, sir. So summary is he has to check the computation of the GST if it is done at the branch level. If it is done at the head office level, then probably he can just report and leave it, as Sundarajan sir answered the earlier question. Or if he checks the computation, probably the input tax credit will give him an answer. If it is not, then he'll have to really get into the details. Yes,
and
so
now you are expert opinion on GST.
Oh, sir.
Very good.
So the next question is from CA Anand Balaguru. He again refers to the circular, RBI circular, which came in yesterday, where it says like we have to go back to the IRAC norms of 2015. So he asked like whether we should start this from 1st February 2020 or 180 day of the financial year.
Come again, you should start from?
So he says like that means NPA date can also be from 1st February 2020 to 31st August 2020.
Absolutely. If there are, I'm sure there are borrowers in every branch of this country where they have not availed this moratorium. And if one of those accounts becomes an NPA, it will automatically become an NPA. I mean, it will be in the date between 1st of February to 1st of March to 30th August. NPA date can be taken. Now, only for those people who have availed this moratorium, they can turn an NPA only after August 30th, not before August 30th.
So
even if they have been 88 days, for example, on February 29, they had been 88 days over due. The 2 days will end only in September. This delinquency period is not counted. So any account which their moratorium has been availed, they cannot have an NPA date from 1st of March till 30th of August. But they can definitely have it on 2nd September or 3rd September. But for those who have not availed it, it can be any date.
There is an extended question from C. Anand Balgu, a very simple but relevant question. He says, how do I bifurcate the borrowers who have availed moratorium and not availed moratorium? Will the bank have a list?
Each bank went about this. There are 2 or 3 ways that every bank went about this. In some of the banks, they asked the borrowers to give them a letter asking for a moratorium. Some of them said, please log on to our website and express your the thing that you want it or not. The third was you can opt out. In other words, you again log into the site and say you opt out, you don't want it. These things were available. Now they should be able to prove to us from with this who are the people who avail the repetitive who are not available. If they say we have extended to everybody without doing any of these things, then I think there's something wrong. You need to look at the system. Otherwise, they should have this data. It may not be readily available at the branch level, but they should be able to pull out this data from the HCBs. In fact, the opt-out scheme was resorted to by the private banks. Most of the nationalized banks had an opt-in scheme. They didn't have an opt-out scheme. Either a letter or an email, or if there's a site, they go and say, yes, I want to avail this. These three options are there.
So if an account becomes an NPA due to reasons like non-availability of security or non-renewable limits, basically the DP, fraud, what should be the date of NPA? Even in these cases, will the borrower be given benefit of that moratorium?
Fraud, there's no benefit, no benefit under the sun can be given to somebody who has committed a fraud. What are the other situations?
Non-availability of security, non-renewable of limits. Probably like the renewal is due and probably the account is short reviewed or not reviewed types.
Well, the circular does not talk about these situations. Okay, one will only have to apply the logic. This moratorium was given to face a cash, the cash crisis that hit the borrowers. To tide over that was the reason why the moratorium was given. Non-renewal of limit is not the job of the borrower. It's something that should be done by the bank. And banks work during lockdown. There is no reason for them to say, well, you should not count it. I think if it is a technical NPA, it should fall within that period. Even if it falls within that period, I think that's where it should be. You can't exclude that period for the purpose of renewal of limits. Non-availability of security is something I'm unable to understand.
Because that should be the sanction. It cannot happen midway.
Yeah. Assume that on a particular case, there was stock that was destroyed by fire and the borrower was absconding. Or there was an education loan during this moratorium period, the moratorium was granted, the student died. And it was a loan which was less than 5 lakhs, which means there would have been no guarantors, no collateral security because it was less than 7.5 lakhs. In this case, security is gone. I think in those cases, the NPA date will be the date of event, even if it falls during the moratorium.
Same date is lost asset.
Lost asset. But classified as loss.
So just to Sundarajan sir is always explain.
In this particular case, he has said that it has been classified as NPA. He wanted only the date. So in this scenario, in case it is I date of that date, that is when the 6 months, 180 days of non-renewal expires, on that date it will become the NPA. Need not wait for this moratorium, all these things. Even it is because it's already classified as NPA. They have categorically said it is already an NPA. When is the date of NPA? Date of NPA is on the date it has become irregular beyond that particular period.
So in case where
I always surprised that the bank has classified as NPA for not renewing the loan within 180 days. That's something which the bank never does, and the system also doesn't do it unless the system has now been improved. I'm glad to hear that it has happened.
Yes. So if an account is short reviewed on March 2020, and not properly, it has to be regularized within 180 days, and it is probably not properly sanctioned until today. So when will this be an NPA? Will this account, will the moratorium period apply for this?
You said short review was done in March 2020, which means it has expired on 31st of December 2019. For a moment, let us understand it has expired on 31st of December 2019. Short review on March, which means the final review should have been happened on 30th of June 2020. So 30th of June 2020, it should have been fully renewed. After that, you will have that 3 months of time, and July, August, September, it will become an NPA. That's all. Ramesh, is it okay?
No, the 90 days doesn't come.
Oh, 180 days. June, for 1st of July 2020, it will become an NPA.
June, on
1st
June 30th,
1st of July, it will become an NPA. 181st day, it will become an NPA.
Okay. So next question from CAG Selvakumar. Whether the branch auditor.
Just one sec. I think the members need to look at the expiry date, sanction expiry date.
Sanction expiry date.
Forget about all short review, medium term review, long term review and all that. When is the final review, yearly review again done? If the period is more than 180 days, it should be
180 days will come in.
Whether it is short reviewed or not reviewed, it's just the 180 days.
By short reviewing, they are not achieving anything. No, short review is for their own purposes. As far as the IRAC norms are concerned, you can do any number of reviews, but you should have the final review within 180 days from the date of expiry. And that has not been done.
Perfect. So that makes it perfect. And there's one question on the soft copies again. Sundarajan sir did explain this yesterday for the benefit of CAG Selvakumar, whether the branch auditor can get the ODCC account Excel file by way of mail from the branch for analysis and audit planning.
Definitely, it is part of your plan. You have to ask for it. They are bound to give it. As I explained yesterday, CSAs have also concurred that they have given the access to the auditors to download that and take it. Only thing is, we will not be able to take a backup from the bank's computer directly. So, I download it in a system, and from there, ask them to send a mail. You can take that mail.
Just to add, I think you use the word Excel in the question. I don't think they will give you an Excel file. That you cannot demand. They will give you in text file. Because most of the branches don't have the ability to convert it into Excel file. The fact that we are able to convert it into an Excel when we download from the system, when we log into our bank account converted, is available at the front end. It is not available at the branch level. So it won't be available to Excel. They will give it to you only in text form. You have to convert it to Excel. You can't have the bank do your work. Converting it into Excel is your work, not the bank's work. If they are, because they will not be able to log into the borrower's account with the borrower's ID. Only if it is if they log into the borrower's ID, can they download it in Excel or PDF or even an MS Money format. Some of the banks even offer that. Otherwise, it will only come in text form. Or the delimited form.
We convert this into Excel for our own analysis.
Absolutely.
So next is again on the irregularity, whether an irregularity will tantamount to an NPA. So the specific question from CA Ashwita Reddy, mortgage loan is sanctioned, but there is no document to evidence the mortgage. The bank staff says it's misplaced. Whether the advance can be treated as an NPA.
See, the point is on the first day, for example, it's a loan given in the day. I'm just taking classic example because the facts are not clear. So I'm taking as an example, a loan has been given in April 2020 for which mortgage should have been created. They say mortgage document is not available. It's a serious lapse. It will be only an LFR issue. After that, the money has been coming regularly. In that situation, it's an LFR issue only. But the same thing is in respect of 1920. Still, they are not able to identify the mortgage papers or whatever it is. It is a serious issue, so straight away it can be classified as a NPA. More than that, I have to examine whether there is a fraud intent in this. Because once a loan is supposed to be created by way of a mortgage and the mortgage documents are not available, there's a possible intention of the fraudulent activity between the borrower and the banker. Because of this, there is a situation which will happen. Once it is a old loan. Even in the case of current year loan itself, this can happen. But in my opinion, the member have to examine what is the exact date of loan which has been. For example, it should have been March 2021. If the branch manager is not aware that mortgage documents has gone for the registration, it has not come back or whatever it is. Probably if they search for it, they may be able to give a receipt from the registrar office regarding having made the payment for the creation of mortgage, but the document has not been received. There is a possibility. I don't say it's not a possibility. See the date on which the mortgage has been created. If it is as earlier as possible, more danger as it is. Once it is earlier, please ensure that there is any intention of fraudulent element which is there, or the earlier branch manager has already done the fraud and given the document to the particular borrower and he has also ran away. That also is not ruled out. I don't say it is the reality, but it is also not ruled out. So we have to see on subjective manner of that particular transaction and examine what is the real file as far as is concerned. We will not be able to tell from the facts which has been given here.
In fact, the member had used the word misplaced. If I was the auditor, the first question that I would ask is if it is misplaced, have you reported to your controlling authorities? Let me see the correspondence with regard to that. Is it an oral misplaced? Orally they've said it's misplaced, or it's because the fact that it is missing should have been communicated to the higher ups on the day that it was discovered that it was missing. Where is that? So that is something which she should definitely ask and then take a call.
The next, again, a very, very practical question, which is what happens to the account if the borrower dies?
Depends on lots of things. What is the account? What is the balance outstanding? Is there security available? Who are the legalists? It depends on lots of things. Okay, I can give you an example. If the borrower dies in the case of a personal loan, or let's say a pensioner who dies, who's taken a personal loan, then obviously the loan will have to be classified as NPA and maybe even a loss, because there's no other way you can recover it. You can appeal to the family members and they might be willing to come and pay for it, but they will pay, then it only gets better. Or a student who has taken a loan, gone to US, it's a very real case that we found. A student had availed a loan, gone to US, and he died in a car crash there. And got to know about it. In a case where nothing could be done because there is no great collateral, there is no great security available. In such a case, the best thing would be for the bank to account it as an NPA and not even account it as substandard. Make it a loss right away, because chances of recovery is very, very poor. Especially given the fact that that's not the right time to go and, that's not the right time to go and ask the grieving parents to pay up the loan when they have not even stood guarantee for it. So those are things that come to them. But if it is a corporate loan, let's say it's a private limited company or even a partnership or a sole proprietorship firm which is doing well, the account is managed properly, there are security available, there is no reason to classify it as a non-performing asset. Because for all you know, the borrower is dead, somebody else may take over the business and run it. But if the borrower died, let us say at the beginning of the year and nothing has happened in the account and there are no security, or we don't have enough evidence of security other than the property that has been bequeathed, which are the latest valuation report, we will still classify it as substandard. We will still classify it as non-performing because there will be no recovery of interest or anything. And taking the value into consideration with the valuation report, we will have to classify it as substandard or doubtful or loss.
Yes, sir. So the next question is, in case of non-granted moratorium borrower, if the actual date of NPA is 23/2020 and the bank has not classified this as NPA due to the interim stay so far, now the auditor has to report an MOC for asset classification for 31st March 2020 under D1 and not substandard. Which category should this fall in? Because the account was technically NPA in March.
D1.
Okay, that makes it clear.
This seems like a rapid fire round.
Rapid fire, yeah. So there are a couple of questions on the FITL. We did take this yesterday, but for the benefit of the viewers today, I mean, either of you can just give some insights on the FITL. So when an FITL account can become an NPA, and what happens if the FITL becomes an NPA to the other accounts?
If you're talking about a non-COVID situation where an FITL has been granted, the FITL will have a repayment schedule. And based on the repayment schedule, if the payments don't come in, the normal IRAC norms will apply and it will be treated as an NPA if it is overdue for more than 90 days or the installments have not been paid for not overdue. If the installments of principal and interest have not been paid for a period of 90 days, it will become an NPA. In this COVID period, what the circular says is, as of all the interest debited between 1st of March 2020 and 31st of August 2020, that interest can be culled out from the working capital facility and converted into a funded interest term loan. And they have also stated that the funded interest term loan should be repaid before 31st of March 2021. Most of the banks might have had their own way of fixing a repayment schedule for this. Either they could have said you pay the entire amount by 31st March without fixing a time frame for it. But they would, I'm sure they would have also said interest is to be serviced as and when it is debited to the account. Or they could have given a monthly breakup of the amount and said every month you will pay this. Depending on the terms of sanction, you will have to look at it. Suppose we had fixed a monthly repayment schedule starting from October. October, November, December has been paid, then the account will not become an NPA as of 31st March, even if January, February and March installment is not paid, because I go back to the normal IRAC norms in this. Although the circular said it should be repaid, It is a money due to the bank. Since the circular does not say if it is not repaid, the entire scheme fails. That has not been stated in the circular. Therefore, I would give the benefit of doubt to the borrowers and say, if it is not paid, look at what is the amount due and look at the sanction letter, the repayment schedule of the sanction letter. If they have given a monthly statement schedule, and in my example that I said about a minute back, if the monthly installment of October and November has been paid, but after that it has not been paid, then for December it has not been paid, it will become an NPA. But if till December it has been paid, it will not become an NPA. If a bullet payment only has been said, you will close out the loan before 31st of March, then the entire amount is due only on 31st of March 2021. He still has another 90 days before it becomes an NPA. But even in the case of a bullet repayment, they would have said interest should be serviced as and when debited, because they would never have given a moratorium for interest on this FITL. So if they have serviced the interest debited from September till December, the account will not become an NPA. But if they are not serviced interest also, obviously the account will become an NPA. Second, once an account becomes NPA, all the other accounts will also become an NPA. It's a standard golden rule. Whether it is restructured or not restructured, whether a special treatment is given to it or not, I probably would still go back to subscribe to that the theory that a borrower cannot be good for part of the loan and not be good for the rest of another part of the loan unless there is a specific exemption given by an RBI circular. For example, if we remember what we spoke about an hour back on agricultural loan, additional finance given to a restructured account need not be classified as NPA even if the original loan becomes an NPA. It can go as per. So things like that are given. Even in the recent circular, RBI circulars, it has been stated. The restructured for COVID thing. Additional finance need not be classified as a NPA. So, or if there is an LC, if the packing credit or if the export bills on LC, as long as the LC date has not matured, as in the LC has not been invoked, whatever amount is due under an LC need not become an NPA, whether all the other accounts of the borrower will become an NPA. So there are exceptions to the rule that once an account becomes NPA, every account of the borrower will become NPA. If that does not fall within the rule as per the sanction ticket, I think it should be classified as NPA.
Only one point which I would like to add in this matter is because a question has specifically come from one of the branch auditors. When I say that the interest on this thing has to be repaid, it is not a physical repayment which has to happen. If he has a regular CC account and the account is debited and the money is adjusted towards his FITL, this is sufficient enough, provided the limit is there. Why I am specifically asking this question is one specific member has asked this particular point. Sir, FITL should have been paid by 31st of March. They have not paid it also. It is only debited to the CC account. Let us be very, very clear. CC account is as good as my own funds. So, as long as the CC account is having a limit and within that limit, I make the payment, I don't have any problem at all. As good as a check which is being given from the CC account. So payment means there will not be a physical payment. Even debiting my CC account or current account from that it is being adjusted is as good as a repayment. Why I am telling this is, if there is a bullet payment which should be made in the month of 1st of September, let us take for an example, I'm not 1st of September, 1st of December, because the FITL itself happens only on 1st of September. So the repayment has to be happening 1st of December, one bullet payment. If he has not made the payment by 31st of March, it would have become an NPA. So for that purpose, they would have adjusted from the CC account, provided the CC account has the limit. If the CC account does not have the limit, and because of this debiting, the CC account has gone beyond the balance outstanding or sanction limit as the case may be, then your NPA norms will come in the normal course of 2015 circulars.
Perfect. So, Sundarajan sir, again, one more repeat on 10% and the 10 crore. There is one live question from CA ST Prasad Veerapaneni. I'll just read out the specific question. So probably like if you can explain this with an example, you've done it several times before, but I think for the benefit of the others, I think it is worth doing it because the basic understanding which everybody should have. The branch has advances of 96 crores and the highest value of advance is 30 lakhs. So he says to achieve the 10% of the 96 crores, 9 crores, he has to pick up at least 300 advances. This be the method, or can you just put some light on that?
As I always
audit and the process audit, I think one more explanation will be helpful.
96 crores is the total advance.
Yes, sir.
96 crores.
96 crores
is 36 lakhs.
30 lakhs, yeah.
30 lakhs is
And it's
really
all
surprising.
applicable to small accounts of large numbers.
No. Why I'm telling this is, these things happen only in respect of our branches which has an advance of anywhere between 20 to 40 crores. Even a branch is having 96 crores, a loan of 30 lakhs being the upper limit is very, very unusual. But even in that situation, as I told you, 30 lakhs is the upper limit. Go for even 100 accounts, then also it will be covering only to the extent of 3 crores, but doesn't matter. If you are able to get convinced about the system which is working properly in this particular matter, you can be very much happy about that and you can give a comment. But once again, when you say 30 lakhs, if you want to go up to 20 lakhs also, you can go for 20 lakhs. You can go for 10 lakhs limits also, that also you can go. By the gradual reduction in the upper limit which is there, up to 10 lakh advances, you can verify those items and give a report as much as possible. Even if you are not having any reporting to be done, you please list out the advances which has been verified and give it in the form of a long format report. That will be sufficient, provided you are satisfied with your sample which has been examined. Once again, I repeat, when you say sample, you have to examine samples in all the varieties of advances, because in the earlier occasions, all the varieties of advances will not be verified by us. Due to the amendment in the long form audit report, we are supposed to comment on the system or process of the advances classifications, advances, credit supervision, all these things has to be commented upon. Please ensure that you pick up sample of advances in each and every category of advances, including staff loans, including staff overdrafts. Staff overdrafts and deposits also has to be verified. You yourself have given an example of staff overdraft being classified as a non-performing asset. So we cannot rule out any of those examples. Please pick up each and every category of advances, some class samples, and please verify that. It is sufficient if you cover 96 out of 96 crores. It is even sufficient to cover 9.6 crores. That itself might be a good sample, provided you are satisfied with this overall scenario of the particular branch.
Sample. So he has one other question. Can we get extension, time extension for submitting the report if we are tested COVID positive?
Yes, absolutely. There's nothing wrong. You don't have to get extension from anybody. You just have to inform the controlling authority that you need another day or two. Don't even ask them for permission. Just tell them that due to the complexity of the accounts in the branch, or the number of accounts that need to be verified for the purpose of fulfilling the long form audit report requirements, you are going to take another day or two more. But be specific about the number of days you're going to take. Don't ask for 1 week or 8 days, then it's not going to be right. A day, 2, maximum 3 days, there will be no issue at all. Yes, there will be calls asking when are you going to give it. The branch manager every 1 hour will come and tell you, sir, every other branch has submitted, we are the only one who is not submitted. Let them not worry about it. You don't need to worry about any of this. Nobody can take your head off. Nobody can remove it from the panel. As long as you are confident about these two, I don't see any reason why the number of days cannot be extended.
Only thing is you should have a justification. You should have a justification. If you don't have a justification, you just wanted to prolong, it is not advisable. Then what happens is the branches themselves go for a complaint. See, we should not give a scope. This I am making it very, very point blank clear, because there were examples. In fact, I can share. We had to give a complaint on a particular auditor when one of my client is unwantedly harassed, and we gave a complaint to the branch, and branch took it up with the higher ups itself, because unwantedly this verifications had happened. It kept on prolonging. It's of no use at all. So please ensure that you have sufficient justification for asking for the time. You don't have to ask for the time. You don't have to ask for the time. As Ramesh said, you don't have to ask for the time. You can do. See, there's nowhere it is stated that once you take up the audit, you have to complete it within 3 days. There is nothing like that. They have an upper limit because they have fixed up a board meeting. For the board meeting, they have to go on reverse calculation. Consolidation has to happen. Because zonal consolidation has to happen, regional consolidation has to happen. Accordingly, only they have fixed up the date. So they have an upper limit up to which date. If you are not able to complete the audit, in a better situation is we don't have to take up all the 3 branches. If they are giving 3 branches, and if you have not able to do it, we'll have to pick up only 2 branches, and we'll have to say surrender. It is not possible. That is the only way it is ideal, because It is for us to justify the time which we are taking up for the audit.
Yes, so the practical scenario, I think he's tested positive today and he has to be in quarantine for 14 days. We can add concern of other members also and give them insights on what are the points to be considered in case we are doing a remote audit. We did cover this yesterday, but still for the benefit of members.
First of all, in fact, one of the branches, the branch manager has tested positive. In fact, one of the branch we are supposed to take the audit, branch manager has tested positive, and he said that officers are also not permitted to work from the branch. So kindly come to the branch after verifying after 3 days. In that situation, automatically it gets extended. This is one side of it. Second side of it is remote audit. Last year itself, we had to do remote audit in many places. Last year, many places were not supposed to be verified. We were not able to do all those things. So whenever you do the remote audit, please comply yourself what is possible to be verified by the process of remote verification by way of advances accounts, operational accounts, transaction audit, all these things you can verify that. And wherever certain documentation has to be compulsorily verified, try to identify your own associates who can go and verify on your behalf and give a report according to the checklist at the local level. That is, if I am doing in, if I am in Chennai, an audit is to be done in Kerala. Identify somebody who can depute on your behalf according to your checklist. They can go and verify the audit and give us a documentation report that you can safely take it, because documentation definitely cannot travel from one place to another place, particularly in view of the RSCPC maintenance documentation. It will not even come out of the RSCPC cell. In that situation, please ensure that somebody nominated by you go and verify and give a report. Other than that, invariably the remote audit can happen from the place where you are doing that. You have to go to the nearest branch of the same bank and ask for the access. They will give the access of that particular branch. You can verify that. Even beyond that, if you are not able to verify, you are bound to give it in your report by way of a disclaimer that we have done only this sort of reporting. On that basis, we are giving that report. You have to necessarily give a disclaimer to the extent, and then only your audit report is complete. Otherwise, it is not complete.
Is it possible to say that we will not be able to take up the audit after giving acceptance, because the scenario has just come now?
When did the appointment letter come? If the appointment letter has come only today, I would have given my acceptance for the assignment when they asked me. Or if he's a second-year auditor, then there's no question of acceptance. On the day he gets the appointment letter, let us assume for a minute that some member has given his acceptance and he said, yes, I'm taking the audit, and has even written to the branches. He is a sole proprietor or a two-partner firm, and one of them falls sick. Forget Corona. Somebody can fall sick. Somebody can have a heart attack and fall sick. In that situation, I think it is impossible to do the audit. So instead of taking that risk, there is nothing wrong, nothing prevents the member or his partner to say, I can only do one branch, 2 are allotted, there are 2 of us here. Unfortunately, my partner has fallen sick and we won't be able to do it within the time prescribed, so please allot it to somebody else. I think that is a very valid, very decent thing to do, and nobody can find fault with it.
Perfect. I think he has a good reason.
After the appointment letters come, you can't go back. You know, if the appointment letters come sometime on the 1st of April, and today is already 8th of April, today you are right to say I don't want to do one branch. It might look a little, it won't look nice. I don't think it should be done.
Perfect, sir. There's a question from C.A. Shankar. He said the bill sent for collection is contingent liability in the balance sheet. This is right. This is the first part of the question. Bill sent is a contingent liability in the balance sheet. Is this right? Is the first part?
It is a contra item. Bill set for collection is a contra item. It will be on the liability side and also on the asset side. It's perfectly right.
So it cannot.
It is not a contingent liability. Huh? It is not a contingent liability. It is shown on both sides of the balance contract.
The second part of the question is part involvement of LC permitted? Please explain the detailed procedures, documentation and system process to be adopted for audit of packing credits and bill discounting.
Okay. Essentially, packing credit is a pre-shipment credit, while bill discounting is the post-shipment credit. This can be available both in INR and in foreign currency. This is available for exporters only. Essentially, the idea is once the exporter has a valid order from an overseas buyer. He takes the valid order along with the LC. Based on this and based on the verification of the buyer through a credit rating agency, the bank gives you what is called a packing credit. This amount is given for the purpose of buying the raw materials and converting into whatever product is exported. Once he exports, once the product is ready and we export it, this packing credit gets converted into a bill discounting, because the bill is raised based on the LC conditions and the order conditions, and the bill is discounted with the bank. So they discount the bill and credit the PC account. So the PC account becomes normal. It gets closed out. This is the operation of both of the PC and the bill discounting. Now, what are the documents that need to be seen for it? Definitely there must be a sanction letter. The sanction letter will very clearly state what is the margin for the PC. What is whether the PC is to be disbursed in foreign currency or in Indian rupees, or partly in Indian rupees and partly in foreign currency. Why is there a component of foreign currency in the packing credit? Sometimes they import the raw material. For example, I'm a manufacturer of leather products. My buyer in America gives me an order saying you need to use Italian leather. He doesn't want the Indian leather to be used. He is specific saying you need to use the Italian leather for it. So which means I get a packing credit where a part of the packing credit is denominated in foreign currency, so that I can pay my supplier in Italy and import that particular leather that the American buyer wants. So it can be partly in foreign currency or partly in Indian currency, or fully in Indian currency or fully in foreign currency. So I first need to look whether the bank has looked at the order. How did they do the appraisal? And PC again is not a running account. So although you can have a running account, most often than not, every time a PC is granted, a separate account is open. So for an exporter who has this PC facility, if you ask for a balance of PC, they'll give you 8 accounts or 10 accounts. Each one of them will have a balance, which means each of this PC account should be backed up by an order and confirmed by an LC. Very rarely will they give you a PC without an LC. That can also be done, in which case there will be other securities concerned, but it is not done on a regular basis, or it is not a common thing. It's a pretty rare occurrence. So the PC is there till the shipment takes place. After the shipment takes place, the PC account is closed and the bill discounting comes in. When I say the PC account is closed, the PC account of a particular order is closed. There could still be some orders for which a PC is still pending, and the bill discounting will be there. The amount needs to be, the bill discounting amount needs to be closed only with reference by remittance of foreign currency. You cannot close it with rupee processing. So if the money does not come within that 1 year, I think now the 1 year, I'm not too sure about the time limit given by RBI previously to 180. Sometimes whenever there's a calamity or whenever there's a problem, they do extend it. I remember reading that during this court period that the period of realization is 1 year from the date of the shipping bill, from the date of the bill. So please check that out. But otherwise, they have 1 year time to repay. If they have not repaid it by foreign currency at the end of 1 year, then all the concessional interest that has been given to them because of the packing rate will not be valid any longer. And right from the day the PC was disbursed till the date they paid in Indian rupee, interest will be recalculated on normal commercial rates and charged. The documentation that as an auditor I need to see is there an order, is there an LC, and has the packing credit been disbursed properly, and that it has not been disbursed for buying a car. We spoke about buying a car yesterday to the CC account. The PC account is given, when a PC account is given, obviously the PC account is debited, it is only transferred to the current account or the CC account of the exporter. But the minute it is credited to the CC account or the current account of the exporter, if the payment is made towards purchase of a car, I don't think it is fair end use of this thing, because it is coming from a packing credit which is meant to be used only for the purpose of buying raw materials or consumables and paying whatever charges need to pay to the factory. It cannot go for buying an asset. So that's an end use that we can verify. We can verify whether all the bills have been settled properly. Are there overdue advances? If there are overdue advances, that is beyond how many days. Why is it? Has the branch verified the creditworthiness of the foreign buyer by means of using agencies who do this verification? One of the agencies that comes immediately to my mind is Dun & Bradstreet. In fact, if we look at that file, I'm sure there'll be a report from Dun & Bradstreet talking about the efficiency, about the creditworthiness of the borrower. Without that, they cannot do it. Then they should also should have gotten insured with the ECGC, Export Credit Guarantee Corporation. These are the documentation that he needs to see, and how has it been operated. That's of course normal thing. In fact, if he's doing a branch which is about 150 crores and there is a packing credit, according to Sundara's classification, it should be one of the large advances wherein a transaction audit also needs to be done. And that's why I refer to using of PT funds for things other than buying the supplies required for the purpose of processing the export order.
Perfect, sir. So I think
that bill, as Ramesh rightly put, the bill outstanding that RBI has given a time for 1 year this year. That is, he was right. But only thing is that even after 1 year, there is a possibility that it is applied for an extension because of this extraordinary circumstances. They can apply for an extension. But only thing is, whenever that sort of extension happens, as an auditor, we are supposed to verify the documentation whether the extension has been properly applied for and it has been granted. And within the extended period, the money has come. If the money has not come by the extended period also, it is going to be a dangerous one. This is similar to, that is, all foreign transactions are always leading to a suspicion because the money is being going out of country and it's going out of in other source of money. So we'll have to be very clear on how this is being verified in respect of PC, next bills, and it has to be realized only by foreign currency. Very, very important, as he rightly put. Other than foreign currency, money cannot be realized at all. That is very, very, in the PC account, there is also a possibility, suddenly, whenever the PC is going beyond a level, they have a CC account. That account they will debit and credit to this PC account. It is not accepted. If that is done, it is dangerous. That when you see the transaction audit, you have to ensure, as far as PC account is concerned, debits can come only for the actual use of funds, for supply of materials or labors or conversion charges, etc. Credit can come only by way of foreign proceeds or by way of discounting of the bill. Other than that, the credits cannot come. This is very, very clear when you see the transaction audit. Subha is frozen.
Last question on.
Before you go to the last question, one other thing I missed out on this PC is a stock statement on a monthly basis is a must for PC. Just like it is a must for an OCC account, the required margin should be maintained, a stock statement should be given, and debtors also should be given. These will be normal standard conditions in the sanction letter. The members should see that these conditions are fulfilled in the spirit in which those conditions are put up. And the DP should be calculated. That's also something which needs to be noted.
Perfect, sir. So the last question, probably like we can just take it up for the audit, the people who are doing audit in the Regional Credit Processing Center, which is a feeder branch for like, which handles some 5-6 branches. What are the points to be considered in terms, if we are appointed as the auditors, branch auditors for the processing center?
Well, once you are appointed as auditor for the processing center, you need to study the process of sanction. They are the people who are doing the appraisal, sanctioning, and also monitoring. Disbursement is done by the branch. When I say monitoring, it does not mean that the branch doesn't have to do the monitoring. They also are expected to do the monitoring, but the main monitoring is to be done by the regional processing center. So your long-term audit report for RAPCC will become very, very essential, because you are only going to be looking at not the transactions in the account, because they are not in the books of that, it is in the books of the branch. So you will not be looking at the account statement of the transactions account, but you will be doing appraisal, sanction, disbursement, not disbursement, and monitoring. So which means the entire gamut of advances in long-term audit report is yours to write as much as you can by looking at it. The second thing is they also have a profit and loss account and balance sheet, because the fee charged for example, the document, the sanctioning fees that is charged with the banks for processing or processing charges is shared between the branches who source the account and the processing center. So a part of it comes to it. So which means the branch auditor also needs to see whether the processing fee has been collected for every loan account that they have processed. That's something which you need to see. The only thing that he does not need to see, which is a large part of the exercise of bank audit, is NPA. There are no accounts and there are no cash. All other things are there. So there are no advances in that. But we still have to look at the P&L, the balance sheet for genuineness of the.
So I think we are done with the list of questions which we had consolidated and answered. Over to Panaraj sir for his concluding.
Good evening, sir. Both of you. And I joined a bit late today as engaged somewhere. And sorry for that. And I especially thank Subhashini for taking over the proceedings for the day. And really hats off to your efforts, sir. Both of you have been so meticulous and so clear in your. Yes, sir.
1 minute with your permission.
Yes, sir. Right.
I would like to compliment Subhashini Ganapathy for the excellent way in which she has coordinated yesterday's session and today's session. She has made the entire 2-day session very interactive, very interesting. Instead of just reading out the question and the member's name, she has combined questions that were common in nature, but each of them having a unique point. Very well done, Subhashini. My compliments to you on behalf of me and to.
That's the reason we call her backbone of all the programs of SIRC. So it is both blend of presentation and subject. She has both of them, and also a great motivator. So it's all a great asset for us SIRC, and she is inevitable for all the SIRC conferences also. So first of all, a great thanks to Subhashini madam at the first at the outset, and then thank you. We keep calling on you for services in the days to come also. And Ramesh sir and Sundarajan sir, hats off to you, sir. See the patience with which you have answered, and both of you, the coordination is so good. It's like a very good opening batsman of the cricket team of our country. So many opening batsmen we have seen combination. So I could recollect only that of the last 3-4 decades of cricket after seeing your combination for both the days. So you are complementing each other so well that every small aspect of a query is answered. And for the first time, as I said yesterday, I would again repeat that you are the real assets of the institute and you are the real pillars of the institute, sir. But for your efforts, definitely SIRC would never have extra feathers in its cap at all India level for all the programs. Because of people like you, we have been complimented at all the time by ICAI that the quality of the programs of SIRC are far excellence, and we are much above the standards of other compared to other regions. So we keep in touch with you, sir. We may need, with the permission of the chairman, I think chairman has joined. Chairman, we may have to go for one more session before the statutory audits are completed, because we can pull up the questions from now on, and we will take the appointment of Subhashini madam and both the speakers for clarifying the doubts at a later stage, that is at the time of reporting, and the 3rd week or 4th week of this month, I think 3rd week. This is my request also. I think chairman would accept it also, and I would request the delegates, a great thanks to the delegates, and also heartfelt thanks to the chairman for coining this type of program of question and answers. The monotony is not at all there, and every member is reached because of this answering these queries, and especially the practical queries, and they are on hand queries that they have to face at the time of concluding the audit reports. So with these words, I would request the members to give their queries, to shoot their queries to us, and after pulling the questions, we may try to go for one more session before the conclusion of bank audits. Thank you all for the great efforts. With folded hands, I thank both the speakers. Hats off to your efforts. Also,
Thank you.
Thank you.
Thank you.
Thank you so much. Thank you, madam. Thank you.
Thank you, Chairman sir.
Okay, thank you.